Let's cover the VIX index, the volatility index. What does it mean for long, short-term investors? And let's track it historically and extrapolate some interesting facts from it. All right, let's get right into it. On the screen right now, you see the index tracked historically. And if there's one thing that really stands out, of course, it's these two massive spikes, one in 2008 and one in 2020. And this represents a lot of fear in the market, not only volatility. Remember, high volatility, higher standard deviations, higher uncertainty on the returns that you will get. Investors hate this, and in 2008, in 2020, we saw a massive sell-off, and then we saw a huge recovery. And I think Warren Buffett said it, that buy when others are fearful and sell when others are greedy. Well, in that case, of course, the VIX can be a good instrument to track fearfulness in the market for a long-term investor trying to get interesting entry points into the stock market. However, this is also of interest for option traders, because with this high volatility, there's huge risk, of course. It will be expensive with options, but there's also an opportunity to make an absolute killing if you find some of these highly volatile stocks and you're able to gamble in the right direction, basically. However, there's another thing that also stands out to me when looking at this graph, and that's how we used to have a lower moving day average. Basically, we had a lot more certainty, less risk, less volatility in the low interest rate era. And now with the increasing interest rates, we can also call it, post-pandemic here, we see higher VIX, and this manifests by seeing larger volatility in the stock market. I mean, look today, we see 10% swings in some cases, and in normal stocks 2 or 3%. I remember, I started 2011 and the market would basically go sideways and the VIX would be a lot lower. And this would manifest by normal stocks going up 1%, down 1%. I mean, really think about this. These 10% swings that we see in some cases. If you were to, let's say you own a gym, right? Let's say it's worth $1 million and, listed on the stock market, of course. And then we see a 10% drop. Well, that basically means that one day the market is willing to pay you $1 million, and then the next day only 900,000. Has a lot changed in one day? In most cases, no. In most cases today, without even earnings, we see big swings, especially in the growth stocks right now. So this is represented in the VIX index, and in my opinion, it represents a lot of opportunity. I think it's in some Asian language where the word for risk and opportunity is basically the same. It's an interesting fact, and I think it's perfectly reflected in the stock markets in these kinds of situations. If we do some examples, in 2008 here, a Swedish bank called Swedbank was trading for 14 kronor a share, and today they're paying dividends of, I think it's 15, 16 kronor every year. So if you bought at this massive opportunity, well, then you would be paid in dividend, passively, more than you put in every year, and you would also have a huge increase in share price on top of that. It was a massive opportunity, but of course everybody was fearful. Lehman Brothers collapsed, it was chaos. And then 2020 we saw this massive V-shaped recovery where the stock market absolutely plummeted, only to recover a few months later. So this was also a massive buying opportunity, it was a massive scalping opportunity for option traders, and just a very interesting and dynamic market to be in for investors. And I think that post this whole massive volatility, we continue to see higher than what used to be normal volatility. And this is also represented in, for example, growth stocks, that some of them are trading 80% lower than they used to. And if we look at stocks that are in the AI sector, the volatility is massive in those cases. And we also see the property sector right now with the higher interest rates seeing a huge drop. And in my opinion, I believe that a lot of these companies will recover some of them will fail, but a lot of them will recover. We're still going to need properties for logistics, hospitals. We're still going to see some sort of offices. I think that malls are really in big trouble, and offices as the second one in this case. But there's still going to be a need for these type of offerings basically in the market, and investors right now have a massive opportunity for this. So look at the VIX. Look at the VIX to see if the market is fearful or greedy. And in this case, I think we still see a lot of fear and we still see a lot of opportunity. I hope you enjoyed this take on the VIX. I hope it was insightful or entertaining. That's it for the video. And as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.